spend most of my time on the newer products, so the Invest Online stuff, Syndicate stuff, and the infrastructure we have in place so that those transactions can happen. I'm involved with most things here on the fundraising side, like everything on the fundraising side, but spend most of my time on the newer, more transactional stuff. Angellist today is solving two of the most important problems you have when you're very early on in your company's life: fundraising and recruiting. We have a pretty good process for that. Is fairly objective, in that we get thousands of startups a week, and then we algorithmically sort them down to a couple of hundred, and then we have some interaction with those startups. So we'll message them, we'll help them with their profile, something like that. We'll narrow that down to 20, 30, 40, something like that, and our team will speak to most of them and have ask them some more meaningful questions, probably get on Skype with them. And then we narrow that down to 10 or 15, and then we talk about that group every Tuesday, that group of startups every Tuesday with a group of venture capitalists and good, really high quality angels, and they help us vet that down, cut that down to 5 startups or so, and then we'll feature that many people. A couple 100,000, so more than 200,000. That's the number of companies.
Number of angels or investors that are listed.
About a month ago it was 21,000, so it's probably 22,000 now. It's growing about a bit over 1,000 a month. And our name does us a bit of a disservice. It's worth pointing out here that only less than 2/3 of them are angels or individuals. They're quite a bit less than 2/3, say about half. And a lot of them are institutional investors, so venture capitalists, private equity firms, growth capital, limited partners of firms, seed funds, like people that have institutional backing. So a good third of Angellist is institutionals and big investors who can write big checks for later stage rounds. The exact number at this point is probably around 1,300.
1,300?
Yeah, I got the number for a conference about 2 months ago, so it was 1,200, 1,250 or something like that. But it's in the thousands. Silicon Valley is much bigger than anything else, and I think that reflects reality. I don't think that's specific to Angelist. I don't think Angelist has some particular bias towards Silicon Valley. I think that's just reflecting the amount of companies here. And then after that, the biggest outside of America is Europe broadly, and then within Europe, the UK is twice as big as the next biggest. So London is basically twice as big as the next biggest city. However, there are some products that we make that would work really well overseas. There's no reason why that wouldn't. A lot of what we do is very, very flexible, very open, very applicable to lots of different markets and lots of different industries. We make it so that it's very, very flexible and not around any particular one particular workflow. And so that's one thing. Our product is sort of very amenable to other jurisdictions. It doesn't really need to change too much. And then secondly, Angelist becomes more useful as it's more global. I mean, I really think this is a winner-takes-all market, or more relevantly to founders, this is the sort of product that has network effects. It's more useful as more people are on it.
Let's talk about the people. How many people are running? I mean, you have on staff and
we're running about 16 people here.
16.
Yeah. So we've got the founders, we've got COO, we have a director of operations as well. It's a group of people that get together to do a deal. And it can be a massive syndicated debt offering, or it can be a syndicate to purchase a big real estate, a big property. Syndicates as a concept has been around a long time. And what we've done is made it easy to create a syndicate and to get a group of people together, communicate to that group, share deals with that group and whatnot. So that's more of the software side. And then on the fund side, we've made it easy for you to actually put that group into a legal structure that means it's easy for that group to invest in companies. So you bundle them all together into one fund, and then that fund invests in the company. So the company doesn't have to deal with everyone in your syndicate. And then you, as the leader of the syndicate, can get carry on that, or can charge something for putting that syndicate together. And syndicates have been used for early stage deals in Silicon Valley for a long time. There are all sorts of club deals that get done where people group together and invest in a company. But it was somewhat inconvenient for the company because those investors would invest individually and the company would have to deal with all their wires and lawyers and documents and everything else. It was also tough for people who had the deal flow and were able to put these syndicates together and invest in good companies to get compensated for that. They could, unless they created their own VC fund, which involves a lot of back office work and a lot of pain, they wouldn't be able to get carry on those deals or charge anything for putting those syndicates together and getting those deals. And so we've just made that really cheap and really fast and very simple. We'll create the fund, we'll register the fund, we'll do all the necessary filings for the fund every year. We'll give the investors their tax documents that they need every year. We'll do all the legal documents for setting up the fund, the operating agreement, the private placement memorandum, all that sort of stuff. And then manage the closing process, collect all the money, all the signatures. Well, the first step is to get backers. So get those followers actually like commit money. And what that means is they'll say, I'm going to invest $5,000 in every deal that you do this year, and you typically do five deals a year. So you get them to say that on Angelist. And then once you've got some backers, then you go out and find what deal you want to do. And then it's not self-service just yet, but at that point you'll contact one of us and say, I've got these backers, I've got this deal, this is their Angelist profile, can you let me run my syndicate? And then you'll set up the syndicate, enter how much carry you want, enter your allocation, enter how much you're putting in. You've got to put some in yourself, you've got to have some skin in the game. That's the syndicator. And then you invite people into the syndicate, and your backers automatically get in the syndicate. They have first dibs on their place in that allocation, and then you can invite some more people as well if you want. We're currently on track to do $75 million of backing this year. That's just the current run rate. I'm sure that the run rate will go up. And then so a lot of people are collecting backers, and we've got about $10 million in backing so far. We did one on the day of our big announcements on the 23rd of September when we announced a bunch of features and a few numbers in our fundraising. And that syndicate SHIP, which was a deal syndicated by Tim Ferriss, that got in about 1 hour, they closed their allocation, the $250,000 allocation. And that could have been quicker. There are a few errors on Tim's blog. $250,000. We'll be opening it up more broadly soon. We'll always have like very tight quality controls on what syndicates can be run. At the moment, we're being very careful about what deals we run as we work through a few minor product issues. But we've run quite a few syndicates already, and they've all closed very quickly.
So the one that are closed, that means that there were a number of backers that were to the target of the syndicate. The fund was created, so all the documents was signed by all the backers. And then the investment was actually physically made
in the company.
Yeah. So close the cycle. Yeah. And that took a few days just for.
So getting all the reservations, we call them. So getting all the commitments from investors to invest in the syndicate. For some of these deals, it takes like 1 hour, and for other deals, it's taken 2 days or something like that, 3 days. And then they go into the closing environment where they sign the documents and send the money. And that can take a little bit longer because they've got to provide a whole bunch of documentation proving that they're accredited investors and things like that. So that can take about 10 days or so. But it's all very quick. I mean, it's way quicker than a traditional venture round gets done. The backers are all sorts today. I mean, mostly the syndicators will bring in people that they know will back them. People that have participated in their syndicates before, people that have invested in their funds before, people that they just know professionally or have co-invested with in the past. So a lot of syndicators are bringing in people they already know. And then people can join syndicates and request or back people, but they have to be accepted by the syndicator as well. So the syndicator vets everyone that's part of their syndicate, and we give them a bunch of tools to do that, a bunch of information about these people and whether they want to accept them into the syndicate or not, and for how much as well. Firms that just want exposure, people at firms who want exposure to different types of deals. They may back syndicators that just have deal flow in industries that the firm doesn't have deal flow in. I mean, firstly, it's important that the syndicator has some good skin in the game. Like, you can't just bring a deal to Angelist and charge carry for it if you're not putting any of your own money in. So yeah, having some skin in the game is really important, at least 10% of your allocation. Secondly, is it just a good company? We apply the usual sort of rubric that we use for featuring a company to these deals. Is it team traction? Do they have good team? Do they have traction? Do they have good product? Is it defensible, etc.? I won't go through that. But is it just a good company? And then thirdly, are the economics good? Is it an uncapped note, or is it? They aren't necessarily bad, but you look out for flags like that. Is it a bridge round? Are investors from the last round coming back or not? If they are coming back, are they coming back on better terms, worse terms? Just do the founders end up earning enough of the company? Are they giving away too much to the company? Are they going to be motivated? And then is it market? Is it a good price? We get a share of the carry, exactly. So we don't charge any fees to the startups. We don't charge any fees to the investors up front. We only make money if the investors make money. And we get 5% carry on each deal. If you're really good, that'll be way more obvious now. If you weren't that good in the past, and if you didn't really offer much beyond just like you're able to source a deal or you're able to like know who's who, then your Angellist sort of makes that obvious as well, that you don't really add much more beyond that. So I don't think it's really going to dislodge or any of the people that are any good at their job. Angels are in an interesting position. As always, the answer is to specialize and to be very clear about what you can provide and what you can't provide, what you do really well and what you're not going to do, and then also focusing on the right companies according to that. So as an angel, it's an amazing time to be an angel investor. You've got a bunch of free tools and you've got access like you've never had before, but you've got to focus, otherwise you'll just end up burning all of your cash on providing services you can't afford. Angel groups currently do a whole bunch of stuff they just shouldn't be doing, like forming the funds and going through all that painful legal work, like trying to get deal flow and run application processes and stuff like that. That's just all non-core work. These people should be spending, I shouldn't say should, but I see their value as, their experience starting their own companies and then being able to write checks. Their value is not in running a good application process or having the best fund structure. We do all of that for them. And so I think it's really, really empowering for angel groups rather than being disruptive. From a regulatory perspective, many places are far ahead of Silicon Valley. Italy is, and the UK is, far ahead of where the US is in many ways. So I don't think regulation is going to be a huge issue. Obviously some countries will lag, but mostly it's looking pretty positive around the world from a regulatory perspective. Culturally, maybe. It took a while even to get people in Silicon Valley used to this idea of putting a lot of this information online, but it's just so obviously useful, and a lot of products go through this at the start. LinkedIn, people didn't want to put their resume online. That was a very weird thing to do, a very private thing. You only showed your parents and your best friends your resume, and you didn't let anyone edit it beyond that. But then you'd go and send it to 50 companies where your job and anyone could see it. So it didn't really make sense that resumes were private, but they were, and people found it weird. Facebook, obviously people have found it weird with Facebook over time. People are just very funny about releasing information, but once they realize the value of the products that share this information, then they're happy.
There is no way back.
Yeah, exactly. And as I've sort of said, there are lots of analogs in other parts of people's lives and other products people use that I think people get it. People get why you have to put this information online now.